Namaste. In this video, we'll discuss about India's 10 that talks about the events those have occurred after the reporting period. Objective of India's 10 is to prescribe when we need to adjust the financial statement and what we need to disclose. So, in respect of the disclosure, we need to disclose about the date of the approval of the financial statement and the events those have occurred after the reporting period. And if events shows after the reporting period that going concern concept is not valid, then in that case we are not supposed to prepare our financial statements on going concern basis. And here we need to check the going concern validity after the reporting period also. Scope of India's 10 is about the accounting and disclosures of the events those have occurred after the reporting period. And reporting period that we have seen have discussed in multiple line items here is not defined in India's 10, and it is any period for which financial statements are prepared, whether it is for the annual financial year period or interim financial years. Thus, the India's 10 applies equally to the annual as well as interim reporting periods. Any favorable or unfavorable event that has occurred between the date of the reporting period and the date when financial statements are authorized for issue is called event after the reporting period. For example, end of the reporting period is 31st March 2024 and the financial statements are prepared on 30th June 2024 and it was approved on 30th July 2024. So the period between the March 24 to 1st April 2024 to 30th July 24 will be called as a event after the reporting period, and any period after, for example, shareholders approval was taken on 30th September. So period between the 1st August to 30th September will not be considered as an event after the reporting period. Anything happened, fire, etc. during this period will not be considered for the purpose of Ind AS 10. And events after the reporting period are classified in two categories. One is the adjusting event, another is the non-adjusting event. Adjusting event is what for which the some condition were existed at the end of the reporting period, and in this case we need to adjust the amount in the financial statement to reflect these events. Example of these events are settlement of court cases, bankruptcy of clients, and frauds or errors. And in case of non-adjusting event, where there was no condition that existed at the end of the reporting period, it arose after the end of the reporting period and we need to just disclose it in our financial statement. We are not supposed to adjust it. Examples are decline in the fair value of investment, natural disaster, or dividend declared after end of the reporting period. For the adjusting event, we can discuss the court cases. Those were settled after the reporting period, and so here the settlement only confirms the obligation that existed at the reporting date. So we need to recognize the liability as per Ind AS 37. Similarly, impairment evidences received. So customer bankruptcy after the period, it just proves the debt debtor was credit impaired at the end of the reporting period. Similarly, the decline in the value of the asset or inventory shows that there was the condition existed for the lower net realizable value at the reporting date. Similarly, in case of the sale of assets and sale cost, etc., bonus and profit sharing amount that was determined after the period, but obligation existed on the reporting date, we need to recognize as per Ind AS 19. Similarly, fraud or errors that was discovered later on proves that financial statements were incorrect and we need to adjust it. So here the memory tip is that court cases, impairment, assets, bonus, fraud, etc. We are the adjusting events. So next step is about the approval process of the financial statement. So it varies, depends on the management structure, statutory requirements, and internal procedures. So case one is shareholders, where shareholders approval is required. So financial statements first approved by the board, later on submitted to shareholders. So here approval date is considered the date of the board approval, not of the shareholders approval. Second case is where there is a supervisory board approval required. Those are non-executive. So financial approved first by the management before submitting to supervisor board. So here approval date is the management's approval date. So here memory hookup is approval date is equal to when management or board sign off the statements, not later approvals. So let's discuss some examples about it. So here the question is, what is the date of the approval for issuance of the financial statement? Those are prepared for the reporting period ending March 2020, 20x2 in a situation where following dates are available. Completion of preparation of financial statement was on 28th May and board review and approves is for 19th June. Shareholder approval on 1st July, general meeting 15th September, sorry, available to shareholder on 1st July, AGM on 15th September, and filed with regulatory authority on 16th October. So here, as we have discussed earlier, that when the results were approved by the management will be considered as a date of approval. So here 19th June will be considered as a date on which the financial statements are approved. Will your answer differ if the entity is a partnership firm? So here also we need to check the final authority who is authorized to approve the financial statements. So when the date on which the partner approves will be the date of approval of the financial statements. Next is ABC Limited prepare interim financial report for the ending 30th June. The interim financial report was approved for the issuance of the board of directors on 15th July. Whether event occurred between the end of the financial reporting and the date of approval by the board of directors, that is event between the 1st July and 15th July, that provides evidence of condition that existed at the end of the interim financial reporting period shall be the adjusted in interim financial reporting on 30th June. Yes. So anything that event has occurred after the reporting date until the period when the financials are issued by board of directors will be considered as an adjusting event. So we need to adjust it. So here answer is in the instance cases event occurred between July to 15 July that provide evidence of condition that existed at the end of interim financial reporting shall be adjusted in the interim financial reporting ending on 30th June, because this is the period that is considered as a adjusting event period. Next example is Board of Directors of ABC Limited approves the financial statement for the reporting period X1 to X2 for issuance of 15 June. So approval of financial statement is 15 June. The management of ABC discovered a major fraud and decided to reopen the book. Okay. The financial statements were subsequently approved by Board of Directors on 30th June. What is the date of approval for issue as per Ind AS 10? So here the board of director decided to reopen the books and final approval was granted on 30th June. Hence 30th June will be considered as a date for issuance of the books, date of approval for issue as per the Ind AS 10. So it is 30th June only. Next is a case is going on between the ABC Limited and GST department on claiming some exemptions for the period X1 to X2. The court issued an order on 50th April and rejected the claim of the company. According, the company is liable to pay the additional tax. The financial statement of the company for X1 X2 has been approved on 15th May. Should the company adjust such tax in X1 X2 or X2 or X3? So case was going on and court order was received on 15th April. So liability was created on 15th April, but evidence was there because case was going on the reporting date, and the order was received before the approval of financial statement. So we need to adjust it in X1 and X2. Here it mentioned that court order received after the reporting period, and it will be considered as an adjusting event and should be adjusted in financial statement for X1, X2. Next example is in the plant of PQR Limited, there was a fire on 10th May X1 in which the entire plant was damaged and loss of 40 lakhs is estimated. The claim with the company, insurance company has been filed and recovery of 27 lakhs is expected. The financial statement for March X1 was approved by the Board of Directors on 12th June. So in this case, fire was there on 10th May, but there was no condition existed on the end of the reporting period. So it will be considered as a non-adjusting event. So only disclosure will be given in the financial statements. Next example is while preparing its financial statement for the year end March X1 XYZ Limited made a general provision for bad debts at 5% of the debtors in the last week of the Feb before the reporting period. A debtor for 2 lakhs has suffered a heavy loss due to an earthquake. The loss was not covered by any insurance company. Considering the event of earthquake, XYZ Limited made a provision of 50% of the amount receivable for the debtors apart from the general provision of 5% on the remaining debtors. In April X1, the debtor became bankrupt. Can XYZ provide for the full loss arising of the insolvency of the debtor in the financial statement for the year March X1? So the bankruptcy condition was existed at the end of the reporting period. So because there was a earthquake and the business of debtor was has suffered heavy losses, and the later event on in April X1 just confirmed the existence of the event, so it is considered as a adjusting event, and the full provision for the bad debts amounting 2 lakhs will be made to cover the loss. Would the answer will be different if the earthquake has taken place after 31st March and therefore XYZ Limited did not make any specific provision in contest of the debtors and made only general provision bad debts at the rate of 5%? Yes, in this case answer would be different because the earthquake condition was not existed at the end of the reporting period. So in this case only disclosure will be given in case of the earthquake. So next is long term. There is a specific provision in case of long term breach, loan term breach. So situation is where breach of material term of long term loan on or before the reporting date, and because of that breach of the condition, loan become repayable on demand. In this case, if lender agrees before the financial statement approve not to repay, not to demand the repayment, and we need to treat it as an adjusting event. Meaning, so it means that loan can continue to be shown as a long term, not as current liability. So here we can remember that if there is a loan breach and lender provides the waiver before the approval of the financial statement, that it will be considered as an adjusting event. So next is about the dividend to the equity shareholders. If it is declared after the reporting period, it will not be recognized as a liability at the reporting date because on that date no obligation was existed. And if declared before the approval of financial statement, we need to just disclose it in the notes, not in the liability. Next is about the going concern. We need to check after the reporting period that if management intends to liquidate the entity or it ceases to trading or there is no realistic alternative to do so. So in this case, there is a disclosure requirements if financial statements are not prepared on going concern basis or if material uncertainty exists that cast significant doubt about the going concern concept of the entity. So here Example is company XYZ Limited were formed to secure the tenders floated by the telecom company for the publication of telephone directories. It bagged the tender for the publishing directories for Pune for 5 years. It made a profit in X1, X2, X3, X4, and X5. It bid in tenders for publication of directories for other circles, Nagpur, Nashik, Mumbai, Hyderabad, but as per the result declared on April 2005, it means in the last financial year, the company failed to bag any of these. It only activity its only activity till date is publication of Pune directory. The contract for the publication of directories for Pune will expire on 31st March. It means in the same calendar year. The financial statement for the financial year 2020, 20X4 and X5 have been approved by Board of Directors on 10th March. So it failed to back the order on April X5 and Board of Directors approved the result on July X5. So there was events on April X5 that confirms that there will be a major uncertainty about the going concern approach of the XYZ Limited because there is no business and it has lost all the tenders. So, going concern financial statement preparation on going concern basis may not be appropriate and we need to disclose it in the books of accounts also. Next is ABC Limited declares the dividend on 15 July as a result of X1 and X2 as well as quarter ending 30th June X2 are better than expected. The financial statement of the company are approved on 20th July X2 for the financial year ending March X2. Will the dividend will be accounted for in financial X2 or X3 or will be accounted for in year X1 and X2? So dividend was declared in X2, X3, and there was no obligation towards the dividend at the end of the reporting period. So according to it will be disclosed in X1 and X2, but will be accounted for in X2 and X3, not in X1, X2. What will be the treatment of dividend declared to redeemable preference shares after the reporting period, but before the financial statements are approved for issuance of the issue for the year X1, X2, whether Ind AS 10 prescribe an accounting treatment for such dividends. So, Ind AS 10 talks about only the treatment of dividend to the equity shareholders. It does not describe the dividend to preference shareholders. So, it is out of the scope of Ind AS 10. Requirement of Ind AS 10 regarding the date of declaration of dividend is not relevant for its recognition. So this is all about Ind AS 10. If you have any clarification, any doubt, you may contact on the WhatsApp number given or you may comment on the video also. Namaste. Thank you.